Okay, let's get started here. Again, my name is Mike Rule. I'm with the marketing department with Corcentric. I'd like to welcome everybody to our monthly webinar, 3 Ways to Audit Your AP Performance. Our speaker today is going to be Dan Andrew. He's our Senior Vice President of Sales. You got to watch out for Dan. This guy's got over 30 years experience in the area of finance and technology and where they merge. Dan's worked with some of the largest companies to configure the innovative payables solutions that deliver an ROI for them in the first year. So part of this webinar is we do have a Q&A panel on your right-hand side. If you have a question, just type it in, click send. If we don't answer you during the webinar, we'll make sure that somebody from Corcentric gets back to you within 24 hours. Now, with all that being said, Dan, I'm going to turn it over to you and let you take the webinar from here.
Thanks, Mike, and welcome everyone today. When you signed up for this webinar, you might be thinking, how exciting is it to talk about 3 ways to audit your AP performance? And I'm here to tell you today that it is exciting. What you're about to hear is very exciting. It's very fun. We're going to give you some practical ways to help you in your organization, not only to understand some of the inefficiencies that you can improve, ways to audit your performance, and also really grow the results with some of the automation. And we're going to give you some samples at the end to kind of show you some of the results that we achieved. So really, these are the things that we'd like to talk about today. I want to share with you a little bit about some of the department inefficiencies that we've seen over the years. I'm going to share with you some industry metrics and help you with really 3 simple ways to help perform an audit on your department so that you can improve your results with some automation. And then we'll show you again a quick summary on how you can take it all the way through your organization. So the first thing we want to talk about is really looking at some potential department inefficiencies. It's kind of like anything in life. When you get started, you really have to figure out where are you at today? What is the current situation that you're in? So when you think about accounts payable, over the years, many people have really viewed accounts payable as a necessary cost, a back office function that uses labor, time, money. It takes effort and dollars to pay bills. That's predominantly what people think and have thought over the years, and that is what it has been. But we're going to show you some ways today that doesn't really put your accounts payable department in an area where it has to be. That might be the way it is today, but it's not the way it has to be in the future. So at the inception, you can think about this cost center, and we're going to show you how you can drive that more into a profit center. But accounts payable is a back office environment, and it's one where you're processing information and you're paying the bills. At the same time, when you think about your business environment, departments that are really controlling the flow of money, you're sitting in a wonderful area in terms of opportunistic. Because the better that you can manage the flow, the data, the faster you can process information, the more of an opportunity it creates for you, potentially as it relates to a revenue opportunity. So when you think about your environment, okay, it's a very manual type process. When it becomes more electronic, that opens up a window of opportunity for you, not only to improve, but also to create economic advantages for your department. And we're going to talk about that a little bit today. At this point, what I'd really like to do is talk about some of the inefficiencies that paper creates. When you think about an invoice that shows up in your office, perhaps it shows up through US Post, or maybe in your email, or maybe it's a PDF that you get sent over to you electronically. Either way, when you receive that information, it has to be worked, right? You have to process it. You have to review it, maybe open up the mail, process the email, validate it, work through a process of varying levels of inefficiency, because paper does cause that inefficiency. And like Mike said, I've had the opportunity over the years to meet with many different organizations, and I've seen a variety of levels of efficiency, all the way from completely manual based here as we look at level 1, companies that have virtually no electronic efficiencies that are built into their organization, where they're really just manually processing paper, invoices, checks. It's a manual process. Even the reporting is very limited and it's very manual based. As you migrate over this spectrum, you can see that if you end up in the best of class, organization, level 4, like we like to see, you have the opportunity to process your transactions electronically. You're automated your payments. You have real-time reporting. You have exception-based processes where you don't let the exception manage the process. Your process is very streamlined, but only a few of the exceptions require a little bit of the work. And then there's a couple levels that fall in between, level 2 and 3, where maybe you're scanning an image, but you're not doing much with it. You've converted it from that piece of paper into an electronic visibility, but you really haven't processed it electronically. You haven't validated it necessarily with automation or smart routing. It's a step in converting the paper to an image. Or maybe you've gone a little bit further and you've taken that image and you've created a little bit of matching, and maybe you have some automation, but again, you're still maybe processing checks, or you're manually entering the information to electronically process an ACH. Wherever you're at today, no matter what level you're at, when you're taking a look at your organization, whether you're in level 1 or you're level 4, we have opportunities for you and to really help you continue with your environment. I've had the opportunity to meet with companies at every stage, and I've seen common ingredients across each of the stages, but I've also seen differentiators. And I can tell you today, some of the things that the level 4 companies are doing that's allowing them to become best in class. So we want to share that with you a little bit today. I think the first question you might be asking yourself as you're looking at these levels, you might say, okay, so how do I migrate? Maybe I'm at a level 1 or 2, and I'd like to be at level 3 or 4. So how do I get there? How do you go from level 1 to a level 4? When you look at your environment today, if you are paper-based and you're manually using your time, labor, energy, and effort, processing checks through paper, there's such a great opportunity to have a dramatic change within your organization. When you get to level 4, those opportunities open up such ways where you could process your payments electronically, you can take advantage of cash discounts, you can have suppliers help fund the offering, you can pay suppliers early if you'd like, through opportunities where companies will allow suppliers to opt in with payment acceleration, and you can defer, keep your terms, or even make them later. It just opens up a whole world of opportunities for you once you can get out of that paper-based environment and really get into the electronic model. So how do you do that? How do you get from level 1 to level 4? Well, the first thing you really have to do, you have to take a deep dive. You have to take a close look at your environment and say, what am I doing today? It's kind of like anything in life. Let's say you wanted to lose weight as an example. You kind of have to do an assessment. Okay, where am I at today? Sometimes you have to look in the mirror or get on the scale and figure out where you're at to determine your as-is condition. Sometimes it's painful, but once you do it, you say, okay, at least I know my starting point. I know where I'm at today. I'm going to do an assessment. I'm going to take a really close look at my current process so I can know where I started and I can measure when I'm going to reach my goal. We're going to share with you 3 ways to do that. These are really simple procedures. They're very easy steps. They take time. They take energy and effort. Even though they're simple and they're easy, it will require time and effort for you to do this, but I promise you, if you take the opportunity to review your organization and look at these really 3 simple steps, it's going to give you a much better opportunity to get your arms around your environment, understand your as-is condition, and really you'll see, I believe, the opportunities will kind of just jump out at you. The first one is really take a look at your current process. Map it out today. What are you doing today with your current process? So you can look at each one of the steps for the invoice processing. The other area I'd ask you to consider as you're thinking about this, recognizing that every payment is born in an invoice and every invoice is born in a purchase order. I would encourage you to step back a little bit deeper as you're mapping your processes. Think about what happens when you're issuing a payment and what caused that, and what happened with the invoice that you're processing. Where did it come from? What originated that? Why did you receive it? And then take a step further and go back to that order. What happens when we first get that purchase order that begins the entire cycle of that process? That'll give you a better opportunity as you kind of map your processes to figure out what can I do to improve my process. And I encourage you to look beyond just accounts payable. Take a look a little bit beyond your own area. You can see other departments that are interrelated, other areas that affect the departments that you're engaged with. You can see that there's processes that will contribute all along the way. The other thing I'd encourage you to do is when you look at these steps, ask yourself some of these questions. Is this really necessary? Is there a better way to do this? Is this a redundant process? What would happen if I eliminated this? Ask yourself this question. What if I didn't do that step? What impact does it have? Not only within the department, but overall. And what would happen if I streamlined some of these processes or removed some of the steps? What impact would it have to overall streamline the process to reduce some of those inefficiencies and improve your environment? Again, this is beginning to look at your goals. Where are you at today? Map this out. I've seen companies over the years where they would create flowcharts. Some were very sophisticated and they used a lot of electronic tools. I've seen other people write it out on a piece of paper. Whatever you do, if you take that opportunity to define your goals and say, here's the process that's happening today, and here's what it looks like. It's an exercise that allows you to really visualize what's happening, and it will call out many of the opportunities to streamline your process. That's the first thing you have to do, figure out where you're at. Then you say to yourself, okay, now that I've documented this and I understand why those payments are being processed against this invoice that originated from this order, and you kind of map out your overall financial supply chain, you want to ask yourself, okay, can I measure some of the elements that are specific to time, cost, and opportunity? That's really your next step. And what you want to do there is you want to benchmark. You want to say, how do I compare to the marketplace? Am I best in class company or am I a laggard? And what are some of those areas? Again, I think the three areas that I would encourage you to look at indicate time, cost, and opportunity. The first one is, how many days does it take you to process an invoice? I'm always amazed when I go into organizations that many companies have difficulty answering this question. And it's not a surprise, really, because some of the systems are antiquated. They don't have the measurements in place. They don't have the data. They're pushing around paper, so they're going to give me a general answer. They don't really know what those specifics are. But here's the chasm when I look at these values in terms of the number of days it takes to process an invoice when you're fully automated versus manual. If you're fully automated, you can process in about 3 days. But if you're manual, you're going to take 3.5 times that, nearly. So if you're a company and you take 3.5 times longer than your competitor to process an invoice, you're missing opportunities. You're probably missing cash discounts. They're probably, the reason that's happening is because you're paper-based. You might not have rules in place. It's very inefficient. You might have errors. You might be matching it manually. There's all kinds of reasons for this gap. But again, this is nearly a 3.5 times delta based on the time it takes to process an invoice. So that's the first one. We said time. We also said looking at cost or money. What's this look like? The average cost that it takes to process an invoice if you're fully automated. Look at the difference here. This is a staggering gap. $2.52 compared to $14.38. That's nearly 6 times. That's a dramatic gap and difference between those companies that are fully automated versus manual. Think about the volume that your company processes. Ask yourself this. If my company is processing a manual AP invoice at $14.38, what does that look like when my company becomes best in class and I'm fully automated? Think about the impact that you're going to have to the budget and to your departments and the opportunities that where you can use that money in a better way throughout your organization. And what about time? The last one we said was time, and that's with the opportunity for processing cash discounts. The best companies process these transactions 74% of the time, which allows them to take advantage of a cash discount. So the companies that are missing the opportunity are capturing that discount maybe 52% of the time. Again, there's a 21% difference between best in class and worst. But if you economically added the value of this, and you said every time I'm processing a discount, maybe it's a 2% discount if I process the invoice in 10 days, and you're able to be a best-in-class company, 2% times the value of what you're paying, that's a dramatic impact. So the percentage might be 21%, worst-in-class company, but more importantly are the dollars that you're contributing to your organization. So when you think about that, we've talked about the time it takes, we've talked about the dollars, we've talked about the opportunity with the cash discounts. I think the next question I'd like you to ask yourself is really, where do you want to be? What kind of goals might you have in your organization? How do you want to improve that? So you took the time to map out the process. You documented it. You looked at payments. You looked at invoices. You figured out those non-PO invoices, where they came from. You figured out the number of invoices that you receive that are initiated from a purchase order. You put all that together. Now you've got your flow chart. Then you go through and you start doing your economics. Okay, let's do a time and motion study. Time and motion to tell how much time does it take from the time I'm processing an invoice all the way through. What's the impact? Not only in time, but also in money. How much does it cost when you average that out? And what's the opportunity for those cash discounts? For those that you realize you're processing outside of the scope of the window of discounts, you know those are lost opportunities. Those dollars are very easily measured because you can determine that you missed that opportunity because of time. So when you put all that together, you say, okay, well, where do I want to be? Well, the first thing I encourage you to do is really, when you're considering your improvement goals, simply when you review the process, you want to try to figure out, okay, how can I lower my cost? I've reviewed my process and I'm going to simplify it. So you go back and you say, okay, there's a lot of processes that we're following that really, they're not helpful. They don't gain efficiencies. They're redundant. They're ineffective. They haven't improved our process. So let's try to simplify it. When you simplify that, you're going to lower your processing costs. Once you lower your processing costs, what you want to try to do is speed up what you're processing today. So you want to accelerate the approval process. How much time does it take when you receive that invoice to ultimately get it approved for payment? It might be one thing to receive an invoice to validate a number, but what about when you need organizational approval? What happens when you need other organizations or other members and team members to validate, and it goes through different thresholds of pricing levels, and that time that you're seeing impact your overall processing of invoices once again becomes impacted? And what is those chances where you can take advantage of a cash discount? You're paying late, so it has an economic impact. What are some other areas? Well, what about the overall visibility of this information? When you have that data, are you able to determine through any kind of dashboards and reporting that the visibility of your invoices are getting faster, they're getting better, you're improving those KPIs, those key performance indicators? How are you doing on the average time it takes to process an invoice, and are you seeing improvement over time? It's one thing to measure those statistics in a static environment, but your business is dynamic. And being able to view that on a repetitive basis where you can see those improvements over the cycle is critical to your growth. It's also critical to see how you're achieving any type of straight-through processing. So when I take a look at some of these dashboard metrics as an example, one that always jumps out at me is the STP rate, straight-through processing. How many invoices in your company, when you receive those, get processed straight through? That means without any manual intervention. That means you have defined and set up rules-based opportunities that you systematically are processing. That number is not increasing, then you're falling behind. There's only two places you're going. You're either improving or you're getting worse. When you stay where you're at, that means you're not improving. So straight-through processing is a great indicator. And many companies have challenges determining what is their STP rate. Once you know that, it's a great indicator to watch, because over time you'll see the improvements as it relates to streamlining your process. It's a very important metric that your organization should be measuring. If you're not today, that's an opportunity that I encourage you to take a closer look at. So what are some metrics that you think you could expect If you're looking at your organization, you're thinking about your department, you're saying, okay, well, I see the cost and time and discount opportunity, and I see some of the metrics that we're talking about, but could you give me some metrics that we could use specifically for our company? Well, I'm glad you asked, because here you go. What about some of the invoices that you might find for every full-time equivalent? So when we take a look at this, we say, let's examine how many invoices is your department processing as it relates to a full-time equivalent employee. So when I see the range here of 1,000 invoices per AP clerk versus 5,000 with automation, once again, that's a 5 times delta. So if I'm a company on the right and I'm automating my invoices, I am more efficient compared to my competitors by 5 times. That's a major impact. Think about what you could do if you're one of those companies that's 5 times faster. Think about all the opportunities that you can add to your organization. If you're on the left and you're doing 1,000 invoices per AP, you're missing out. You're spending a lot of time on labor. You're probably not adding as much value that you could if you were improving the process and the velocity of invoice automation, as well as the value add because of what you're providing back to your organization. For example, let's say you're processing those invoices on the right, 5,000 compared to 1,000. You're probably in a position to better take advantage of this cash discounts. Why? Because you're processing them faster. You're processing them more accurate. You're processing them more timely. Compared to the 52% that we saw earlier today, that 21% difference is real dollars that you're taking to the bottom line. More and more, one of the things that we continue to see with many of the organizations we have the opportunity to talk to are a lot of the compliance and audit trails that are in the marketplace. The demands that companies are having today with making sure that you're compliant, not only with Sarbanes-Oxley, but also many of the other ISO compliance that organizations want and seek to make sure that you have that information in place and that you can provide those audit trails. When the auditors come in, are you able to very easily show your process all the way through? Can you show when that invoice was originated and validated and three-way matched and processed and paid? Can you very easily do that with your audit reporting? Because you need something like this if you don't. You need to be able to show when was the document processed, what was the voucher number, the timing, the invoice date, all that information at your fingertips, so that when the auditors come in and you want to provide that information, you can show the entire life cycle of an invoice. And really what we've seen over the years is I've seen companies that fall into a couple of different categories as they're working through this, and I review their process before and after automation. When I see companies before automation and I review their transactions and I look at their process, it's a dramatic difference once they use automation. Once they start using some of the business procedures that we put in place, the rules-based, the education of the tools, how it's automated, how it's improved, how it improves the processing time, the value, the dollars, the speed, the rate, all of those things, you can take companies and you can take them from a cost center and convert them into a profit center. That's when more and more companies are looking at AP as a strategic asset within their organization. It's being transformed. It truly is. I've seen companies where they come in and they talk about their environment and how much it's costing them and how much it costs to process a paper invoice and issue a paper check. And when we're all finished with them, they end up looking at their organization that has eliminated the paper invoices, eliminated the paper checks, processed electronically, improved the speed, time, performance, value. Guess what? They turn into a profit center. They become value-based. Many companies, and you hear it in the seminars, you read about it, AP organizations are becoming strategic. You know why? Because they're putting it all together. They're looking at it and saying, if I can get our arms around this organization and figure out what we're doing today, how we can improve it, compare it to the benchmarks of the organization, put together these initiatives that allow us to become more strategic, then we can not only lower our costs, we can figure out ways to create rebates, reduce our expenses, have suppliers help fund these offerings, better manage our working capital, better manage our supply chain finance with our suppliers. It just opens up a whole world and they become strategic. That's why you're hearing so many companies that are becoming more focused on accounts payable because it truly is strategic. Let me give you a couple examples as we're getting close to the end of the half an hour here, just to kind of mention a few results for you so you can walk away with today. We took two examples for you that we wanted to share. I think one is in a retail environment and another one is a distributor, but take a look at this. Here's a retail company that put together some of the metrics you're talking about that we talked about today. Their processing time was slower and they were having trouble achieving those cash discounts. They were more in the category, the 52% that we talked about, than the 74% because of the time it took. So the validation, the accuracy, the approval process was slow. Guess what happens when you do that? You miss your cash discounts. We're able to put this program in place to say, let's automate this process. First of all, get you off paper and get it converted to electronic. Let's put some rules-based in place and business logic and processes that automate. Let's drive to STP. Let's get the straight-through processing. Once that's in place, it's very easy to say, I have an invoice. Supplier's offering me a 2% discount. I've processed it now in 3 days, not 15. So I have the choice based on my working capital position. If I choose to pay that supplier early, I can pay him in day 9 now very easily. I'm ready to pay him in 3. But I can pay him in 9. I can take the 2% cash discount. The annual return on that is about 36% compared to waiting in day 15 when I was previously missing the cash discount. So very simply, if I'm processing $10 million that are potential opportunities for cash discounts, and I take a 2% discount being offered, that's $200,000 every year over the next 3 years. That's $600,000. That's a real bottom line contributing dollar factor to the organization, simply because time, process, and discount opportunity captures were achieved. It's really that simple. And so we see companies that every day they're missing the opportunities because they're not taking the time to really review, improve the process, and streamline it into an electronic fashion. That's just one example. How about an example from one of our distributors here? The distributor company, their opportunity was more focused on labor, time, and inefficiencies. So they looked at their environment and said, okay, as we consider our as-is conditions, and we take a look at our environment and we figure out what is it really costing us today to process an invoice and how much time and the labor associated with that. Let's streamline that. Let's get to STP. Let's get to electronic processing. Let's improve our payments and electronify the organization. Here's a company that they saved $500,000 just by putting together the blocking and tackling that we talked about today and some of the transformational type AP solutions that Corcentric offers, allowing them to streamline the process and contribute $500,000 into savings. And that's an annualized basis. So it's coming up to 2:30 here, and I just thought I would offer a few comments here as a summary. As Mike said, there's an opportunity, I believe, to online ask any questions that we can address. But let me just kind of finalize here today and summarize just 3 quick points for you. When you think about your environment, I encourage you to really look at how much paper are you getting today, and let's move that out of that paper environment. Let's get you into an electronic offering so that you can map your processes to say, okay, this is what I'm doing today, but I'm going to improve it over time and get rid of the paper. You're going to look at your metrics and say, okay, what are the benchmarks? What is my organization doing today? And how does that compare to industry leaders? Am I a best-in-class company, or am I a laggard, or am I somewhere in between those levels 1 through 4 that we talked about today? And finally, think about those areas for improvement. Think about those opportunities. When you're looking at those areas and say, do we really have to do it this way? If I was starting out fresh, would this be the process we would follow? Or is there a better way? Is there an electronic way? Are there ways to help improve your process? At Corcentric, we'd love to talk to you and help you with that. We look at companies every day. We consider ourselves experts in this area. We can tell you exactly where you're at in stage 1, 2, 3, and 4, and we can help migrate you from level 4 all the way up to level 1 to become a best-in-class company. It's what we do, what we like to do. We like to help companies improve their process and really convert that accounts payable department to a strategic asset in your organization. I'm going to open it up at this time for any comments or questions you might have through the web. And I want to thank you for taking the time with us today, and we look forward to speaking with you further.
All right, thanks, Dan. Just one simple question here, and I can actually take care of this one. It's we will be sending out a copy of the presentation along with a copy of the recording, usually within 24 hours. So that one I can get for you, Dan. I do have one question here. How do you make evident to top management the ROI to have AP automation? So what's a good way to show,
how do you make evident?
What's a good way to show the executive team that there is an ROI for automating accounts payable?
I think there's a couple ways that you can approach that to show the executive team the ROI. What I've seen organizations do is they would share their internal analysis to say, here's where we think we are today. And we've been able to compare that to a best-in-class company. If we were best in class and we use the same metrics that best-in-class companies use, here's the pure dollar savings that we would bring right to the bottom line. That way the executive team can say, okay, you're not just saying these are numbers that you're hoping to achieve. These are real dollar savings that companies have achieved when they hit best-in-class. So if you take a best-in-class metric, apply it to where you're at today, and show the delta, it becomes very easy. It's also very believable. It's very tangible. And it's third-party data to say this isn't something that we just hoped that we could achieve. It's what the market says best-in-class companies choose. You can really do that in a few slides. You can use some of the information that we did today, that we talked about today, and you can show where you're at, where you'd like to be, and what that means to the bottom line. I guarantee you, if you can simplify that and show that ROI, you will get their attention. Thank you for the question.
And Dan, that looks like it's the only one. So I would just let everyone know Dan's contact information is up on the screen. If you have any other questions that are wanting to be answered, please reach out to Dan. His email, dandrew@corcentric.com, or give him a call. With that being said, Dan, thank you very much for today, and thank you to everyone for joining us.
My pleasure. Thank you.